Hello everyone, welcome to today's lesson on financial statement for a business. In this session, we will focus on the income statement, also called the profit and loss account. This statement shows the income a business earns and the expenses it spends within a given period. From it, we can know whether the business made a profit or a loss. So, by the end of this lesson, you will be able to explain what an income statement is, identify the main parts of an income statement, then understand why it is important in measuring the performance of a business. Remember, this is grade 8 Pretechnical Studies content. So, learners and educators who are taking grade 8 through these financial statements under entrepreneurship, I welcome you to this session so that we can grasp something on this substrand on income statement. So, allow me to start by giving a brief description of income statement. So, it is also known as profit and loss statement, as I have echoed earlier. Income statement, it is a financial document that indicates a summary of business income and expenses. The statement informs on the business ability to generate income. So, those are a brief statement on income statement. Let's discuss about the components of income statement, which are some of the components that make up an income statement. So, we have sales, cost of goods sold, we have expenses, revenues, gross profit and gross loss, we have net profit and net loss. So let me give a brief description of each component. Sales. We are talking about money obtained from selling of goods or services. Then, cost of goods sold, we are talking about cost that relates to the goods sold by the business. Cost that relates to the goods sold by the business. Then we have expenses. Here, these are costs incurred in the process of running a business, and they include rent, salaries, wages, electricity, and extra. Then we have revenues. They are income earned from other sources apart from sales. Example, we have like discount received and commission received. Then we have gross profit and gross loss. Here, we are talking about the figure arrived at when the cost of goods sold are subtracted from the net sales. So, here as a learner, you are supposed to know that when the net sales are more than cost of goods sold, it is a gross profit. And if the cost of sales is more than net sales, it is gross loss. For example, we can have cost of goods sold to be 20,000 and the net of goods sold to be 40,000. So, if you compare the two, the cost of goods sold is 20 and the net of goods sold is 40,000. So you find that For us to get the gross profit or the gross loss, we are going to take the net of goods sold, we subtract the cost of goods sold. So you will find that we are coming up with a 20,000. So here it's a gross loss. Then we have net profit and net loss. Here we are talking about the figure arrived at after all expenses have been subtracted from all income. So here also some points that you are supposed to note down. When revenues are more than the expenses, there is a net profit written on the debit side of the statement. And if expenses are more than the revenue, then there is a net loss written on the credit side of the statement. So those are the components of income statement that the learners are supposed to have in their mind, because we'll find a question asking them to name some of the components of an income statement. So let them have these components in their mind, in their brain, so that it will be easy for them to answer a question like that. It's good we see an example of an income statement. So here I have an example, and the question says, Brian's Academy Manufacturers Limited had the following financial information as at 24th August 2025 from its books of account. So use the information to do the following. Part A, calculate the gross profit. And part B, prepare an income statement for Brian's Academy Manufacturers Limited. So let's go. Here now we have the financial information with me. The first one, we have the sales. Sales, we have 950,000 shillings. Then we have discount received with 1,000 shillings. We have discount allowed with 1,100 shillings. We have commission received with 1,500 shillings. We have cost of goods sold at 500,000. We have water expenses at 5,000. We have commission paid at 2,000 and salaries and wages at 100,000. So that's the financial information on the Brian's Academy Manufacturers Limited account for that business year. So let's go to the solution of this area. We have the first question was, we are supposed to calculate the gross profit. So for us to get the gross profit, we are going to take the sales minus cost of goods sold. We take the sales minus the cost of goods sold. So the value of our sale was 950,000, and the value of our cost of goods sold was 500,000. So we will take 950,000 minus 500,000, and we get 450,000. So 450,000 becomes our gross profit. So that question is already solved. 450,000. Let's go to part B. So here we are supposed now to prepare. We are supposed to prepare an income statement for Brian's Academy Manufacturers Limited. So as you can see there, I have come up with the solution on the part B question, and that's the format of the income statement preparation. That's how we are supposed to prepare it. You start by writing Brian's Academy Manufacturers Limited income statement for the period ended 24th August 2025. That information is very crucial, so make sure you include it in your statement. Then we have the two parts. So you are going to divide your statement into two parts. We have one first part on your left and we have another part on your right. So the first part, we are going to write there the cost of goods sold, that is 500,000. Then we want to get the gross profit. We had already calculated it there, so gross profit, we'll put it also there under the that part of credit. We put it under the part of credit. So we take 500,000 plus 450,000, we get 950,000. Remember, it's still the same that the one that we had there under the sales. So that's what you do. And on the right, the part of debit, we put there at the top sales. So sales was 950,000. It's there. You tally it, you put it down there as 950,000. Then we go back to the part of the credit. We have now the expenses. Expenses, remember, we're talking about the money that is going out, not coming in, it's going out. So that's the one that we include there. So the first one, we have commission paid. That one was 2,000. Then the second expense is discount allowed. That is 1,000. Then we have water expenses. That is 5,000. And then we have salaries and wages. That is 100,000. So when you add all the expenses, we'll come up with 108,100. Then let's go to the part of debit where we have sales. So we are going to take the gross profit that we got, then we put it under the debit side. So here we have now that it's a profit and not a loss, so we put it on the debit side. So it's gross profit, it was 450,000, so it's there. After that, we have the revenues. So revenues, remember, these are money which are coming into your business. You are receiving them. So under the information we were given, we find that revenues, we had discount received. You received a discount of 1,000. Then you also received a commission of 1,500. So when you tally the revenue, you will come up with 2,500. Now, let's go back to the part of, before we go to the part of credit, we want now to tally all the digits which are under the debit, so that we come up with the final figure. So we are going to take 450,000, that is the gross profit, leave alone the sales, that one we are not working with it. So we start from the gross profit, which is 450,000. We add the one that we got here, that was 2,500. So we are going to come up with a total of 452,500. So that is the final money that we are going to get under the debit part. And remember to underline it using two lines. So that part is finished. Let's go to the credit part. Under credit part, we have already added the expenses and we'll come up with 108,100. So here we want to get the net profit. And for us to get the net profit, we are going to add all income. We are going to take all income, subtract expenses. All income, subtract expenses. So the income we are talking about is the one that we calculated under the debit, that one for 452,500. So we are going to take that one on our right hand side. We take it, we minus 108,100. That was our expenses, and we'll come up with 344,444. So that one will be our net profit. So for us now to come up with the final digit or the final money in our credit part, we are going to take the net profit plus the expenses. The net profit plus the expenses. So we are going to take 344,444 plus 108,100. When you add the two, you will come up with 452,500, the same amount of money that we got under the debit. In short, when you are working on the income statement, the final product must be the same. On the debit and credit side must be the same. And if you follow the steps I have given you here, you will come up with the same amount of money on the two parts of an income statement. So that's how you go about calculation of an income statement. If you have any feedback or you have any query about financial statements, let it be channeled through the comment section. And if you haven't subscribed to Brian's Academy, do so that we can grow together. I depend on you for my channel to grow, and I'll be a happy man for you subscribing to this channel and commenting and sharing. Let's make CBE, CBC more entertaining and engaging. I love you, and may God bless you.